and welcome back to yet another exciting week of the Lazy Money Game. This week's episode is going to be quite different since I will devote most of my time to talking about the history regarding GameStop and what it is that is currently going on. Since I had the viewer asking what a short squeeze is, I tried to explain that in the video that I uploaded Thursday, so if you haven't seen that, I would highly recommend that you go and see that to learn something about the technical terms which you need to understand in order to understand the situation here. But in this episode, I'm going to focus more on the story and what we are currently seeing and why I think this is truly unprecedented and really history in the making. I thought 2020 was crazy. What I am seeing now completely baffles me. But before we get going with this story, let me just put in a big fat disclaimer. I don't know what news you can trust anymore, because the money at stake here are so large that there are people who is willing to do things you don't even want to speak about. Next, I have to warn about explicit language because I'm going to show some posts from Wall Street Bets, and those guys are telling it as they see it, and they are using really explicit language to do so. So if that is not your thing, then I also suggest that you just skip this episode because it is very different from what I usually do. And the final remark before we get going with the story is I will present a bunch of links in the description below so you can go and see all the data and all the interviews which I will be talking about in this episode. So I'm not trying to hide what is maybe true or is maybe false. I can simply not verify whether or not the information that I'm capable of finding is actually true. So enough with all the disclaimers and all the remarks, let's get going with the story. So Melvin Capital, this hedge fund, which was founded back in 2014 and has been quite successful in doing what hedge funds are doing, making money, making large percentages gains on whatever capital they have invested. They have shorted stocks in GameStop, and they have shorted stocks to a degree where they are now over 100%. That was at least the case before the beginning of this week. And I mean, if you just look at this wiki article, when is the last time you have seen a disclaimer like this, that there is rapidly updating news on a Wikipedia page? This just goes to show how much is currently going on with this company. So what happened next was a Reddit user with the acronyms DFV saw what Melvin Capital was doing and say, well, this capital fund has actually been too greedy this time, because now they have managed to shorten more than 100% of the shares outstanding. So if I buy the stock, then I know I will be able to sell it at a higher price later, no matter what happens to the company, because they are forced to buy the stock by the nature of the contract. So what did he do? Well, he trusted his analysis and then betted heavily against Melvin Capital by buying the stock. So he bought shares in GME, and he actually bought 50,000 shares and paid a little less than $4 a piece. And at the same time, he has also bought some call options for GME. And as you can see here, currently that represents a value of a little more than $31 million. And he has paid less than $15,000. So that is why he is known as DFV, or Deep Fucking Value. And just to show you here, when this comment was posted one day ago, it got more than 280,000 upvotes and a lot of different prices. Another important thing to note here is now this community has more than 7.3 million followers. I mean, 14 days ago that number was below 2 million. So it has really gained in popularity. So before we start to look at why this subreddit has risen so much in popularity over the last 2 weeks, let me just highlight that this DFV person has his own YouTube channel, namely The Roaring Kitty. You can find a link in the description below. And he is, of course, talking about investing. And what I really like is he's quite a humble guy. And he also emphasizes that the way that he is investing is probably not for everyone, since he is taking a lot of risk. If we then fast forward to this week, then you can see the stock chart here. It is all over the place. I mean, Monday and Tuesday seems to be quite calm and steady compared to what we otherwise have seen within the week. And then from Tuesday to Wednesday, you can see that there's a difference of 100% from market close and until market open, which is truly astonishing level of volatilities. But it actually gets even more drastic when we look here on Thursday, where we saw a drop from 468 and all the way down to 132. So have we seen this short squeeze is of course the answer that a lot of people were asking themselves when they saw this huge spike and then saw the drop. I mean, if you were looking at this, then you could potentially say, oh yeah, I think this was the short squeeze. And especially if you then saw the news which came out from CNBC, this article saying that Melvin Capital has closed out their short position in GameStop. And this is where I start to trust nothing, because that article came out on the 27th, and that is really well timed if someone is trying to force the market down in value in case they want to close out their short positions. And it just becomes even more suspicious when you then figure out that Robinhood and interactive brokers, Ameritrade and other brokers shut down for the retail investors, so they were no longer able to buy stocks in GameStop. That simply just kills the demand side, so of course the stock has to drop hugely in value. And the next thing that makes me even more suspicious and don't really want to trust too much of any news that I'm currently seeing is that, for instance, we have this web page where you can see that days to cover, meaning how many days would it take with the current volume of shares being traded for the shorter to close out their positions. That would be more than 6 days, since there were still a short interest of more than 97%, which were the numbers that I also presented in my episode on Thursday. But if you compare that number to another web page, then they say that the interest days to cover is only 2.5 days. So you can see that there are huge variations between the numbers, and this matters significantly for how much of a squeeze you will see in the stock. So let me just for a moment try to go down the rabbit hole. I mean, if it is 2.7 days or 6 days that it takes to cover your short position from Melvin Capital, and we see that this huge spike increase, then it doesn't seem plausible at all that they have actually closed down the position. And when you then on top of that see that interactive brokers and Robinhood and Ameritrade and other brokers are closing down for the retail investors, prohibiting them buying stocks but only allowing them to sell stocks, and then see this huge price drop, which really seemed like a well-timed attack to try and spook the retail investors into selling at a much lower price before a short squeeze will happen. I mean, then, at least in my opinion, anything is up for grabs here. Anything can be true. So if you are capable of pulling off a stunt where you prohibit the retail investor from buying the stock and killing the demand side, trying to get out of your short position, would it then also, for instance, if you go even further down the rabbit hole, seem like they potentially would double down on their investments, meaning if they thought it was a good investment to short the stock at $4, how good of a deal do you think it is if they try to short the stock at 325? That sounds even more plausible, especially if you take into consideration this fact that, say, if you owe the bank $10,000, then it is your problem, but if you owe the bank $10,000 billion, then it's probably the bank's problem. Have you heard about something like this before? Sure, I mean, anything is literally up for grabs here. And when you then see news articles like Robinhood's needing to raise $1 billion from the investors in order to let people continue buying GameStop stocks, I mean, if Robinhood was really in a crisis situation, why haven't they then shut the purchases down of all stocks? Why is it only 4 stocks that they were saying that the investors could no longer buy? I mean, there's so many things here that doesn't really add up. And what you are then truly happy to see is that the SEC is reviewing the volatility aimed at GameStop frenzy and vows to protect the retail investor. Hence, on Friday, it was opened again on Robinhood and other brokers that the retail investor could start to trade. And lo and behold, what did we see? The demand side once again go up. Hence, the stock of course increased in value. And it just becomes even more suspicious when you have the chairman from the Interactive Brokers saying that they are trying to protect the retail investors by not letting them buy into this quite volatile stock to try and restore faith in the market. I mean, when the big players are asking for more regulation from the SEC, when is the last time we have heard about this? I think it was back in 2008 where they actually had severe problems. Then all of a sudden, when it is the big players who is being beaten at their own game, then all of a sudden we need more regulation. So even if they managed to close down some of their short positions with this huge price drop and killing the demand side, I mean, what was the counter that they then received? I mean, the Wall Street bet community rose from 1.7 million in less than 2 weeks ago to now over 7 million. So now this is starting to be much more of a global interest for a lot of retail investors. I mean, they are really pissed that the hedge funds are trying to keep the game rigged and trying to force in more regulations and then using the words trying to protect the retail investors. I mean, anyone who invests at these levels know that they have a severe chance of losing all the money that they are putting in. We are no longer trading on the fundamentals of this business. They are trading based on that there will be a short squeeze. So what looked at a really well-timed attack to drive the stock price down then looked as having the opposite effect, at least on that Wall Street Bets community, because now there are more than 7 million users in there. So if you piss one person off, that's one deal. But I mean, if you piss off the general population, they can surely start a riot. And what are they doing and what are they currently doing? Well, they are buying the stock and holding on to their stocks, trying to squeeze out the short positions of the hedge funds even more and saying, well, we know that you have to buy this at some point, so we're just simply sitting and waiting for you to buy at whatever price we demand for the stock. And just to show some funny posts from the Wall Street Bets community, there's a post that goes like this: it's time for government bailout at GME shareholders at $10,000 per share. This would be roughly equivalent to the 700 billion bank bailout in 2008 that was necessary to prevent systemic risk. Or a post like this: are you a Robinhood employee and looking for quick tendies? Get 5.5 million on average as a whistleblower. Or a post like this: hey SEC, here's your market manipulation, Robinhood working to keep GME down. Because here you can see how high the GME shares has traded, and then see how the price severely dropped after Robinhood imposed a limit of only 1 share purchases by their customers. Or a post like this, where TradeZero defend our right to buy stonks, as they're often called in Wall Street Bets. Robinhood's excuse is BS. And then there's a description here where Dan Pipitone, co-founder of TradeZero, have fought for the right of the retail investors to keep buying stocks in GME if that is what they wish for. Or some of the more funny things: at Times Square they have bought this billboard say GME go BRRR. Or at a highway starting as of tomorrow, GME to the moon. Or this one, for instance, flown over the Robinhood headquarters. Or another humoristic post like this: the evolution of the trash icon. Here you can see how the trash can and the Windows computer has evolved over time, and now they are going to have a completely new trash icon here in 2021, since they have used the picture from Melvin Capital. Or you can go to YouTube, where there's of course also someone who has made a chanty song from Donkey Trunk. I will of course leave a link in the description as well, so you can have a laugh as I did when I watched this 2-minute long song. I mean, it was actually quite hilarious. If we then turn back to the more serious stuff again, then a post like this, elite billionaires scaremongering the public, has begun over the weekend to shake paper hands on Monday. So this article, Goldman warns if the short squeeze continues, the entire market could crash. So if we take a look at the S&P 500, yes, then surely we can see that it fell in value as of Friday, and even in the Danish news media, there were some of the big banks saying that the reason why the stock market fell as of Friday was due to the fact that there is now more volatility in the market due to stocks like GameStop, and simply because of the fact that a lot of hedge funds are de-risking, meaning selling stocks to try and cover those short positions, then the entire market is dropping in value. But does this mean that we are about to see a total market collapse just because a bunch of retailers are holding on to investments in 4 specific companies, and that one hedge fund or multiple hedge funds has shorted that specific company? I mean, in all likelihood, it seems that at least a couple of hedge funds would have to go bust. But I mean, if you go back and look to this argument saying if you owe the bank $10,000 billion, then it is the bank's problem, sure, that might cause for some extra regulation and perhaps some bailout, and then it's everyone's guess about what is going to happen. And just to clarify one thing, this value investor called DFV, I mean, sure, he was the first one who posted that he has bought into this stock, but by no means is he responsible for what you're currently seeing. I mean, Wall Street Bets is a community where people tend to post a lot of gain porn and loss porn, meaning either trades where they have gained a lot or trades where they have lost a lot. That is simply the nature of that community. So if someone tries to blame this retail investor saying you started this, then they are simply wrong. This is not 7 million people who is coordinating what they are doing. They simply just like to invest, and then they show what they are doing. It is, as somebody has pointed out, the most decentralized investment fund as you can imagine. And I strongly recommend to listen to this interview between the Massachusetts Secretary of State and Kevin O'Leary regarding whether or not you should regulate more, or how this is actually playing out in the market. I mean, when a Secretary of State is speaking to more regulation, and then you have a wealthy person saying, well, we don't need more regulation. I mean, if you are investing in the market, then by nature you are speculating, and the Secretary of State is actually saying that they need more regulation because you cannot trust in the market, and this should not be going on because they are no longer trading on the fundamentals. Well, the retail investors is seeing that a hedge fund has been too greedy, and now they are speculating against their short positions. That has always been the nature of the market for more than 100 years. So why is this all of a sudden a rigged game just because a hedge fund stands to lose a substantial amount of money? And just to try and cover the collusion part as well, whether or not there is a case regarding the private investors. I mean, as a private investor, you are allowed to talk about what you think about a stock, but what you are not allowed to is trying to collude with others to drive the share price in a desired direction. That is actually market manipulation by definition. So, how does this stack up against all the retail investors on Wall Street Bets? I mean, as far as I can see, they are just writing, I like the stonk, I buy the stonk. If I buy the stonk goes up in value. I think it would be pretty hard to make a case and say that they are forcing each other into buying this. They are simply sharing and making their opinion public, and everyone can join this, so all of this is public information. So how is this squeeze in GME different from the squeeze that we saw back in 2008 for Volkswagen? Well, in 2008, the squeeze, which you can see on the graph here with Volkswagen, was due to the fact that the numbers of outstanding shares fell from 45% and down to 1%. And since there was a total of 12.6% of the high numbers of shares outstanding being shorted, then all of a sudden there was shorted 12 times more stocks than what was outstanding. Hence you can see this spike in the graph that made Volkswagen the most expensive company on the planet back in 2008. So even though the situation back in 2008 was quite different, since there was only shorted 12.6% of the numbers of outstanding shares, but then due to this all of a sudden drop in the numbers of outstanding shares, that meant that you saw this huge spike. And that is why when you compare to the GME today, that you're seeing all these retail investors say just buy and hold, because the more they buy and the longer they hold them, the more severe the squeeze will be, because they will then have reduced the numbers of outstanding shares, forcing the price to go to ridiculous highs. No one knows how high this will go, and in theory there is no limit to how high it can go. So that is why Goldman Sachs says that this can potentially break the entire market, at least in theory. The question is, will we see some governmental intervention if this goes to too high of a severity, saying that the stock costs $10,000, as some Redditor had posted, which I showed earlier. And if you want to know more about the technical details of how it happened back in 2008, that the numbers of outstanding shares was reduced from 45% and down to 1%, I will of course leave a link in the description below as well with all the details in that article. I'm just trying to keep this episode from not being too long and filled with too many technicalities. I'm just trying to highlight what is going on here and make it as simply available as I possibly can. So that was a lot of talk regarding the GME stock and how this short squeeze is potentially affecting the entire market. At least that is what the big banks are saying currently, and someone are even scared that this will force the market to collapse. I mean, of course there was other viewers in the audience who have asked why I haven't covered any of the other so-called meme stocks where we are also seeing potential short squeezes. Well, the reason why I only focus on GME is because that's the only place where there is a squeeze with more than 100% of the outstanding shares, so that will be the most severe by all means. So hopefully you now feel you know more about what a short squeeze is and how it compares to the case that we saw back in 2008. Now you know more about the history which has currently been going on here, and why I don't think there really is a case regarding the Wall Street bets community and trying to accuse them of colluding and trying to change the regulation in even more favor of the big hedge funds. So if you like content like this, or you have a question regarding this short squeeze, then please don't hesitate to leave a comment down below, or remember to give me a like. It really helps out the channel. So an obvious question to ask, of course, is how do I intend to use this information? Well, I'm a dividend growth investor, so I do not intend to invest in GME, since it's not a company which pays out a dividend. And at the levels which it is currently trading, I'm not really interested in participating in that game. I can understand why a lot of people are, and the more power to them, but this is simply not my ball game, so I will stay away from it. But how about this potential total market collapse as Goldman Sachs is currently trying to scare people with? Well, if companies are selling at a discount, sure, then I will buy at a discount. I will keep dollar cost averaging into my portfolio and try to increase the amount of dividends which I'm going to receive every single month. Nothing has changed there. And if it is as Goldman is predicting, that the market will drop severely, well, who will actually be affected by this? I guess it's someone who is lending out money to hedge funds or other institutions. So potentially, I guess we will see some financial stocks drop heavily if they are going to lose a lot of money on these hedge funds bets. So it could be that it would be JP Morgan I would see at a big discount. It could be Bank of America. It could even be Wells Fargo. So I don't know. I will simply have to follow along and see what happens. And if there is a big discount on a company that I like, for sure, that is where I will put my investment, if I don't think that the fundamentals of the company has changed. And just to give a brief update on the portfolio, you can see that there was a red circle for this week's episode, meaning that my portfolio is down in value compared to last week. We go to the portfolio overviews tab. You can see that the portfolio is down $2,800 compared to last week. You can see that the cost has remained unchanged, meaning that I have not invested anything within this week. If we then go to my favorites tab, namely the dividends tab, then you can see that I have received close to $35 within this week of dividends from Simon Property Group. That means that in January I was very close to receiving $140 in total, which is almost $140 more than I gained in January last year since I started the portfolio. So I am truly happy to see this big of an increase. So that actually sums it up for yet another exciting week of the Lazy Money game. So what a week this has been. I mean, we are only 1 month into 2021. We thought 2020 was crazy back in March when we saw that huge drop. Now we have seen that Goldman Sachs is out and trying to scare people and talking about a total market collapse due to this increased level of volatility into the GameStop stock. And I mean, we have seen that the SEC is closely monitoring the retail investors, accusing them of potentially market manipulation. Well, I mean, not to take the focus away, but if someone only lets you sell stocks and not buy stocks, I think that would be a better place to start if you're talking about market manipulation, because if you can only trade in one direction, then that's not really a free market. So perhaps that would be a better place to start looking for someone who's actually potentially manipulating the market. So until I see you next Sunday, remember to comment, like, and subscribe. Bye!